Welcome to the Real Estate Show on KMED. May the 13th is our date. Pete Belcaster and Joe Brett, the real estate guys, with you. We're both real estate brokers with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED. We'll talk about all sorts of real estate-related issues and topics through 8 years and almost 400 of these shows, weekends we've spent with you on the radio. Dude, we've gotten old over that time period there. My goodness, haven't we?
The best thing that we do is we bring some great guests to the table every week, and we've done so again.
Because nobody would want to listen to you and me for 8 years, would they?
Oh, for an hour?
Way.
For an entire hour?
No way.
We have a hard time doing that ourselves.
No kidding. Anyway, Alice Lima is in the house today. Alice is a real estate broker with John L. Scott here in Southern Oregon. Alice has been on our show many times in the past as well. Nice to see you. How are you doing?
Great to see you guys.
Great to see you, Alice.
Here we are in mid-May. Can you believe that? Like the year's almost half over.
Yep, and the season is hotter than ever.
You're busy, aren't you? You're...
Well, I think everybody is. The housing shortage, has created a lot of work.
Mm-hmm. Yes.
A lot of work for us realtors, and a lot of buyers out there trying to get the house of their dreams before the interest rates go up again.
Yeah, they're hopefully holding steady, at least right now.
And we're trying to help one another in our John L. Scott office of getting leads and sharing information and helping our clients get out in front of what's a really tight market.
Yeah. Well, Wallace Wright is also here in the house with us. Wallace is a broker with John L. Scott. Nice to have you here for the first time.
Thanks so much for having me.
Now your story is, we know Alice has been around. You've been around a while, but I wasn't saying it that way. But Wallace, tell us about your story. How'd you become? This is your second career too, then, right?
Maybe third.
Third,
actually.
okay.
Yeah, I lived down in this area in the late 70s, early 80s, left, went to San Francisco, Seattle, and now I'm back and got into the real estate gig about 3 years ago. Totally loving it. It's a perfect fit for me back here in the Valley. And I got one word for the business right now.
Yeah, well, that's good to hear.
Busy.
All right, well, that's good to know that. Well, what do you think as we've seen the stats that come through with this? And tell us what's going on, just in your opinions about the market, kind of buyers, sellers, everything like that. And let's hear what's going on with you guys. Tell us what the market's doing.
Well, I think the market's still really tight. If you're trying to buy a property in almost any price range except the $1 million price range and over is, the days on market is a little longer, but everybody else is really struggling to find a place to live. And the sellers, for the most part, are getting their houses sold in 30, 45 days in most of the price points.
Yeah, the one area exception to that seems to be in the luxury market, where in those price breakdowns, there's quite an inventory all of a sudden, it seems like, in the $1 million price category. Kind of odd, isn't that?
It is, because if you look at the stats, right below $1 million, it's less than 6 months. And 6 months is kind of the neutral territory for days on market.
Well, those stats show still the inventory from a year ago. We remember a year ago what it was like. And if you look at the new listings from April of this year, April to last year, they were still down by 25%.
Yeah, we're really struggling to find people who are willing to sell their property. And some of that is getting slowed down because they cannot find a replacement home. And we have many, many more families actually throwing in the towel on Southern Oregon now. Just starting to notice that as we were talking in the lobby getting ready to go on the air. Many, many people are actually relocating out of the area.
Really?
They can't find a replacement place here.
Well, we've heard that for people that, where are you going to go? Right. If you're downsizing, where do you go? Wallace, where do they go? What are they doing?
It's a lucrative seller's market, but it's also a dicey deal for the sellers to sell.
What are we going to do?
Well, it can be. It's a great time to be a seller, a little bit more difficult for a buyer. And you do see people upsizing and downsizing, having a difficult time finding. We've got strong demand coming in from out of state to the area. And I think people staying in the area as well, wanting to upscale just a bit and such, and very difficult to find properties.
All sorts of properties. It's not just one or the other. It's all the way across the board. Been looking at rural properties. There's the EFU's land. We've talked about our marijuana growing and all the kind of cannabis things around here. But boy, it seems like things have been picked over pretty well. Wallace, do you see that?
Right? Pretty well have snapped everything up around here. We've got people coming in looking for things. Even just this week, 2 or 3 folks have inquired to me looking for things, but I tell them it's going to be a difficult road. You're just not going to find anything. It's been pretty well picked up at this point.
Picked up? That means what, prices are going to go up?
Well, prices
Isn't that what they go up? Isn't that what that is? And they have gone up.
You look at some of these, and you can't even believe the prices that they're asking for these rural lands.
Let's talk about sellers right now, because I'm always curious, especially when you're in a market like this, and we've been talking about it's a seller's market for months. Well, for more than a year, I guess, has been this way. More than that, actually. We talk about it being a seller's market, and sellers want to list properties. And Alice says you've seen an uptick in your business of listings. Wallace, the same thing. We have too, but sellers tell us about their expectations. What are you telling sellers about pricing of properties at this time, especially in this kind of a market right now? What's your advice right now?
Well, it's not a free-for-all. If you want to sell your property and get moved to the next stage of your life, you still need to have some realistic expectation about what the market will bear. You can't go too far over really 3 to 5% of what is going on in your neighborhood. So you can't just pick any number you want. However, the prices are going up steadily, and there is still a pretty nice demand. But in most of the price points, even up to the $800,000-$900,000, if you don't have an offer in your first 3-4 weeks, then you're out of sync with the market. And I think that's the part that people need to really settle in and get realistic about.
The sellers get a little intoxicated with their position in the market.
That's a good word.
They think really highly of themselves.
Yeah.
Yeah, I have to concur with Alice too. I always warn my sellers, don't get too ambitious with pricing, because what you'll do is put it on and it won't get attention for 2 or 3 weeks, and then the attention will go away, and eventually you're going to end up in a lesser position than you would have if you would have priced it correctly going in.
Mm-hmm. Are they listening to you, or tell me what they're taking your heeding your advice?
Oh, of course they are.
I love the conversations. Well, I talked to my neighbor, or I talked to so and so down the street, and they used to be in real estate, and they say you should do this, and you can get this for that property. Those are my favorite conversations to have with people, because again, you got to be realistic in the price. Do you think? And my favorite lines are, well, somebody from California is going to come and pay for this. They'll pay this high price for a property. And my experience is that people, even with money, are not going to overpay.
No, people are very wise. The buyers are
They're
very wise
smart, aren't they?
Too much information out there. And the other problem with it is, too, if you overprice, you can't forget that it has to appraise.
Yeah. How have you? Yes, absolutely. And how have you been with your appraisals coming in recently? Have they been matching up, or tell me what's your experience there?
Well, go ahead.
Go ahead. We're ready to go.
Given that the buyers are taking my advice, we haven't had much problem with that, because we're not, hopefully not overpricing things, and the appraisals have been coming in pretty well.
And my buyers that are in really super competitive price points that really, really want the property, they're actually coming in with more cash. They're signing away their appraisal right, and they're taking the property as is. They're still getting an inspection. They still have the right to get out of the deal. But if there's a discrepancy in the appraisal, then they are already stepping up in their offer that they will make up the difference. So it's very, very strategic to present your offers like that. It's the way to get your buyer into first position and get the house. However, it's not sustainable. And a lot of us are talking with each other. The listing inventory is still really low, but we're all starting to get a lot more listings. How long has it been we've been in this up market? Maybe it's starting to look like it could change in the next year. We'll have to see.
Just the daily new listings have creeped up.
They are up, but at the same time, it's a little bit schizophrenic, because we're still dealing with the reality of these frenzies, these feeding frenzies on houses.
Tell people about what you just said earlier, because I want to make sure I get this right for our listeners. About, you said they suspend the appraisal, or tell me what you're doing there. What does that mean now?
If you really, really want a particular property, you can write in your offer that you waive the appraisal.
Waive the appraisal.
You're still getting an appraisal, but you're waiving that is going to dictate what you're paying. So if you're bidding in any of the mid-range markets between $300 and $450, and there's lots and lots of offers, you can write in the offer that regardless of what the appraisal comes in at, that buyer is going to make up that cash difference. They have the cash to do that. They're also writing in that they're going to take the property as is. They still get to get the inspection. They still get to remove themselves from the transaction if they don't like what the inspection says, but they're not going to ask for repairs.
And it's the lender that puts the brakes on and sets the loan amount at the appraised level. And it's the buyer that's then got to make up that difference. If they bid above asking price, they know that they're getting into that territory where there's going to be a discrepancy in the appraisal, and they've got to tell their lender and the seller they're going to make that up and be good on that.
Exactly.
That's kind of a good way to do that, isn't it? I mean, I think in the competitive, you're talking about in those competitive bands there. One of the cool things about, our office is, John L. Scott, we've got those breakdowns of those price categories, where, what is it, $150,000 to $250,000 is what a half a month's supply of inventory. there's not much out there, and so that's why you get into those multiple offer situations, right?
Yeah, and the cash people don't get an appraisal.
Yeah.
Cash, no, absolutely, yeah. Well,
And they can close in 10 to 20 days. So we're losing.
is that still
our regular buyers
trumping?
losing.
I mean, that's still trumping. If cash comes along in a buy, and you've got 2 or 3 buyers, the cash is going to trump it, doesn't it?
Often will.
For
yeah,
a seller,
absolutely.
and I don't blame the seller for doing that either. I mean, that's it's a stronger. I guess it's a
cleaner,
stronger,
it's faster,
less hassle, etc. Like that. Any problems that any of you are seeing regarding title searches, title problems? I've had one interesting one, but I'm not sure if you guys have run into anything like that. Liens or weird things that you find on properties.
I haven't really experienced too much with that. Most of the preliminary title reports that come in are very clean. They'll usually do a name search to make sure that Billy Bob isn't the one with the child support problems and so on and so forth. But nothing really outstanding.
We just had one. I had one with 3 liens. All of a sudden, we learned there were 3 liens on the property that we didn't know when we had originally made the offer. So how do you got to get those liens off there, because you got to get clear title, right? And it doesn't work. It doesn't work there. Well, what else do you think is going to, Alice?
Well, I've had a couple that caught all of us by surprise, where people, couples that are coming together in life partnership situations and then go to purchase property together.
Okay.
If you're not completely honest with your partner, these searches do turn up all kinds of things. So we've had multiple situations where one partner had a history, either criminal or owed money, old DUIs, old burglar, all kinds of things that are showing up on their record. And it causes a crisis in the transaction. So we just like to have that conversation, all of us, in the beginning when we're writing offers. They are going to search out all of the parties. So if there's something going on, then you should tell somebody so that it's not a huge surprise and we can work through it. Mm-hmm. And it's both buyers and sellers.
Yeah, well, that's true. The month's supply of inventory overall in our area, was still in April, was down still 20%, though, Alice, from a year ago. Wallace, it's amazing, because I thought, last year was pretty good year.
Tight,
It seemed like it was going to be more. But part of the thing is that, remember, overall sales. Well, this most amazing stat of all is the overall residential sales the first 4 months of the year this year compared to last year were down 17% in Jackson and Josephine County. And at first people go, that can't be. But think about it. Why would that be?
Sure doesn't feel like it, does it?
No, it doesn't feel like that. Absolutely. Yes, but it is.
But we've still got a strong influx of people. We've got builders struggling to catch up and get the supply increase and such, and the pressure is still on. I think it's going to be a while. The only saving grace is, I think, often people will ask, are we in a bubble? Is it going to pop next year?
Mm-hmm.
I think the saving grace for that is that we aren't lending money to people that have no chance of paying it back. That's a big factor in that. So I think we may flatten out at some point, but I think we may be a little ways off from that. It may be coming where we're starting to reach some equilibrium with supply and demand. But we'll see how the year progresses.
I've been scouring the Upper Rogue the last few weeks, and man, it's great to see all the framing and all the houses that are going up. We got some guys out there working as hard as they can to get those things up. I mean, they're popping up everywhere.
But Joe, what are they building?
3-2s, single family residences.
And what are the shows? What are the shows that we've done the last month or so? What do we need? We need 3 and 2s. We need 3-bedroom, 2-bath homes.
We also need some other
alternative
options.
housing. Yeah,
exactly.
and none of that's going up, is there? You've been, I know, at the planning commissions this week. You had a lot of those. What were some of the issues that you got there with Jackson County and the city of Medford? What's going on that we should know about?
Actually, the city of Medford is about to finalize its urban growth boundary next Wednesday with Jackson County. It'll be the second in the public hearings on the RPS situation there. So that's where they're going to finalize which of those properties. And there was a huge, long process in the city of Medford to identify and which are the most advantageous to develop and what are the sensitive lands. So that's one of the biggest things coming up for the city of Medford. They got to clear that hurdle with Jackson County.
And weren't you at that solar farm? Why did they put a solar farm on beautiful prime farmland? I mean, I don't get that. Why? That's good real estate to do. Okay, why?
And it took a significant exception for that to happen. This is out on Ross Amway Lane.
Significant exception.
It's a 90-acre section of a property out there there's 600 and 900 acre lots in this part. So it's a small fraction of this individual property. But it was the proximity to the substation that's nearby there, and the power that they need and the distance that power has to travel to power their photovoltaic panels and things like that. So this operation is backed by the federal government because it's alternative energy and it had some really powerful things backing it.
Don't we?
The proximity to that substation was the key element that allowed it to be put on that farm.
But don't we have? I understand that, but I thought we had like land use laws that couldn't take that type of soil farmland out of production for this. But they did it. There's other places it seems like in Jackson County that you could put that kind of stuff on that would have less impact.
Substation that had the power capacity to power that was the key thing. And in 30 years. They will pull it up. It's designed very environmentally friendly to where you pull those foundations up, and it's farmland again and agriculture.
I want to be here in 30 years when they pull them up. Okay, that'll be. I'm going to put that down, and we're going to come back and watch them do that. That's an interesting thing. Anyway, the Real Estate Show here on KMED. We're with Alice Lehman, Wallace Wright from John L. Scott in our Market Watch show today. We got a lot more to talk about here today. As things are interesting times here in the real estate market, certainly throughout Southern Oregon. Pete and Joe are coming right back after this. Real Estate Show rolls on KMED. May the 13th is our date. Pete Belcastro with you here today on the Real Estate Show, and we're with Alice Lehman, Wallace Wright, and John L. Scott in our Market Watch show today. Those stats come out. Boy, things are moving, as you can well imagine. One of the most interesting part of it in watching, stats is because, stats don't lie. They actually, they tell their own story. And one of them, in terms of in Jackson County, is that median price has increased double digits, 14% in April over April from a year ago. And that is one of the things, Alice Lima and Wallace, that, before the Great Recession, those were double-digit increases were going on every year. So that's something that I think that's that dark lining, that's out there, isn't it? That, gosh, we got to, you don't want to go too hot. You don't want to go too cold. You kind of want to go just right. And boy, what does that just right mean? Right? I don't know.
Well, and I think you just have to be honest with yourself and your family's needs about the market. And whatever the market is, if you need housing, you need to just kind of address it in an assertive fashion. So if the market in the neighborhood you're looking in is requiring overpriced, higher than full price offers, then put something together so that you can compete with that, or lower your price point so that you can compete with that. Because we don't see that the market's going to get lower or softer for 5 to 8 years. I think a lot of us agree that we're still in the middle of an upturn, but it might stabilize.
Mm-hmm. Yeah, as frustrating as it is for buyers to jump into the market that's overheated and getting multiple offers and stuff, you've got to assimilate to the market, and you've got to have an agent that can help you do that so that you can be successful. 3 to 5 years from now, if you're able to buy now, you won't be sorry. You'll get to experience that asset growth and such. That if you wait and look back and go, you're going to be saying, I shoulda.
I woulda, shoulda, huh?
And we were just talking about that during the break, that we've got people that bought houses only 2 and 3 years ago. We're talking 36 months or less. And they purchased properties in Southwest Medford, some of the smaller parts of East Medford and Central Point for under $200,000. They got a 3-bedroom, 2-bath with a nice yard. And right now, they could sell those houses for $240,000, $250,000, $260,000, and probably have multiple offers. That's a huge amount of appreciation. We're not sure we're going to continue to see that rate of increase, but it makes you stop and think. You want to get in on it now while you can.
Now, we're all experiencing increases in listings. They're down, 25% from a year ago. So we're seeing more listings right now. Do you see that as the beginning, maybe, of a more balancing market? Is that possible right now? Do you think, or what do you think about that?
That can be part of it too. But the other emphasis, I think, many of the agents have been focused on listings. Because that's where the business is.
Sure.
You're going to turn your attention to acquiring listings versus buyers because that's what you want to get. That's where the demand is.
But they haven't been there.
Well, they haven't been, but they are coming up. They're definitely coming up.
Yeah.
I would say 70% of my business over the last 6 months has been listings, which is sort of phenomenal to me. But I think that's happening to a lot of agents.
Well, that's probably
and I think
a
lot
thing.
of people are calling their agent right now and saying, okay, I'm ready to sell. I'm ready to get on with the next step of my life. But if everybody does it at the same time, then it begins to balance out our market. It won't be as much of a seller's market. But actually, that's kind of okay.
I think so. Yeah, absolutely.
Yeah.
I don't think either one. The best time is when neither the buyer or the seller kind of has the advantage, but we're even, right? I mean, I like that. I guess I like that better because it's more. Well, other people don't, so it doesn't really matter. But anyway, who knows? Well, who knows what they're going to do? Let's talk about housing, other housing that's out there. I know, Alice, you work with a lot of investors. Are you still seeing investors getting into the rental market? Tell me what's going on there. Or is that slowed down, or
No,
what's going
actually,
there?
I think mine is actually speeding up because the investors that are borrowing money are really, really panicky about the 1% interest rate increase we've had, right?
Yeah,
so they're
yeah,
all
as a-
scrambling. And that's part of why I think our housing shortage is exasperated. And the investors can go in, and if they've got extra cash, they can outbid, regular homeowners
Right.
that just want a place to live.
So you don't think that that's having an effect? The new pending law that investors are still in the game.
They are. I think a lot of us agree that we've got 5 to 8 years in front of us in Southern Oregon, that we're going to see some good appreciation. And so they're feeling like we're in the middle of a cycle.
Yeah. Well,
that rental market is just as tight as the sales market is.
It's amazing how they parallel each other.
Yeah,
Absolutely.
The incentive for investors is very strong to get into the rental market. You can certainly get a nice return on rental property.
But you can't find properties, though, can
Well,
you? That's the
the
problem,
minor
I guess.
problem, yeah.
And what about duplexes, fourplexes? I mean, those are really in demand, aren't they? From once they go on the market.
Yeah, I've had a little bit of experience with a couple of clients looking for them, and it's been nearly impossible for
It's
us to be
impossible.
successful.
Yeah.
So what a lot of investors have to do right now, because the inventory is even smaller in the multifamily market than it is the regular single family home market, is they have to accept substandard properties and be willing to do rehab. And that's just not everybody's cup of tea, because if the property doesn't finance, you either have to put that money in yourself, and that takes cash, or you have to get a 2 or 3K kind of rehab loan, but that means you have to live on it.
Right.
Not all investors are willing to do that.
No. Well, that's interesting, isn't it? But you're still saying, it's interesting to listen to you, because different people have to, everybody has a different opinion, but you're still saying that that's strong. If the investment purchasing is still out there and strong.
It is. Right now, I don't know what you're seeing, Wallace, but I have a really big batch of investors that want super clean, newer, 3-bedroom, 2-bath, cookie cutter, East Medford, Central Point, Ashland, and they're never going to live in it. They're from California. Okay. They're winning the multi-offer bid because even if they're getting a mortgage, they've got cash to make up the difference in the bidding war. So if it does not appraise, they can still get the property.
Wow, boy, you really want that property then, don't you? If you're going through all those steps.
Well,
wow.
The incentive is so strong with the strong and rising rental rates in the market due to the shortage is a real strong incentive for investors to get in.
Have we reached that point where the rents now it is again? We've talked about this over the years. Where it's cheaper to own than it is to rent. Is rents seem to be going up higher at a faster clip than regular buying housing does.
I think that's definitely true. That it is cheaper to buy than rent.
And what are these people doing? How are people? We had Danielle Roberts from Sterling West was in here last week in the show. You can go back and listen to that on realestateshoworegon.com. And it's just it's heartbreaking to hear the stories of people who cannot find any type of rental housing, and the backlogs and the waiting lists, and these poor people, what they have to go through to find something. It's really in rents. So we even talk about rents, and they're going up as well. Well, I don't know what the answer is, but we got a big problem in our valley with housing.
Yeah, it's so competitive, and my heart really breaks for people. But I'm a renter too. I own property and I rent. It's a weird combination, but more and more of us are doing that because it allows us to have full investments with other people on the properties. But to compete as a renter, people are literally having 4 and 5 copies of their application in the car with pre-made checks out for their security check, and they're trying to be first in place to get the property.
Well, but I know, but there's not enough properties coming back, and so
there's not, and that's why
the problem there.
If you're willing to be a landlord, this is amazing. It's an amazing time.
And that's because rents are high, right? That's what you're saying. So you can get a better investment now high. Because the rents are high. Your cap rate, your percentage that you earn is higher, right? And that's what it is.
That's correct. Yeah, absolutely.
Yeah, and you're seeing that across the board, right? I mean, it's not everywhere.
No, we're seeing it in duplexes, fourplexes. We're seeing it in apartment buildings, and we're seeing it in single-family homes. So the investment spectrum is wide and very diverse, and we're seeing that kind of a situation across the board. So it's a very interesting time.
Mm-hmm.
Yeah, the other side of the coin is it's so sad to watch. If you are a renter, seeing your rents go up exponentially every year, it makes it very difficult. And until the supply gets fixed, it's probably going to continue that way.
Well, we certainly...
a lot of people are actually just moving out of the area. We spoke of that briefly during the break.
Yeah, tell me about that. Yeah, what do you experience there?
People cannot find a replacement house if they're purchasing. or they've got millennials or adult children, and
Still living with them.
As a family unit, they're leaving the state. They're going to Texas, they're going to Washington, they're going where the kids can get jobs, and the housing market is so much better. The prices are lower, and the jobs are good. So we're seeing people sell their homes in the Rogue Valley, and they're just packing the whole family and going somewhere else.
Taking everybody with them and saying bye. Giving up this beautiful place, right?
But if enough people
many
do
people
that,
want to come here.
Yeah, if enough people do that, we'll have plenty of houses.
Yeah,
in the wrong way.
I just don't think that's going to happen though, because people love coming here, don't they? They want to be here with us. That's why we live here as well. Hey, we got the Real Estate Show. We're with Wallace Wright and Alice Leamer from John L. Scott here on the John L. Scott Market Watch Show. We're coming right back here to KMED right after this. The Real Estate Show continues here on KMED. May the 13th is our date. Next week, well, we're all about estate sales. Lance Landers from Ionic Estate Sales will be here. We'll give you some good tips about if you've got something like that coming up in your future. And let's face it, a lot of us do, estate sales at some point in our life. And boy, you want to do them right, that's for sure. And Lance will be here next week. Hope you'll join us. Of course, all of our shows are available. You can watch any of them free of charge at realestateShowOregon.com. A couple of other stats here was we were with Alice Leaman and Wallace Wright today on our John L. Scott Market Watch show. In those April stats, new home sales, about even from a year ago. So, we all talk about all the new homes going in, and it's about 70 of them in that time period. The interesting part, rural properties, Wallace, you said at the beginning of the show, the demand is kind of eased off. There's not as much, and there are fewer sales by almost 40.
Well, I wouldn't say the demand has eased off.
The demand is not eased off.
Smaller.
The availability of,
but the availability has really gone down.
It really has, down to just 117 sales. All homes on the market during that month of April were down 17% from a year ago. So, in distress sales, remember we used to talk about those a lot. Remember, Alice, short sales. Remember those two words?
Yeah, used to be lots and lots of those. Not anymore.
Not anymore. In fact, in April, it's the lowest I've seen in all the 8 years that we've been sitting here looking at these things every month. In all of April in Jackson County, there are only 21 distress sales. 21. That's amazing. There used to be hundreds of them.
Yeah, but that means we're healthier. Our economy is doing better, and that's what we really. Our little valley really needed that.
And remember, there was one point I think a couple of months ago, in one of the stats from the NAR showed that Oregonians, 96% of the homeowners in Oregon were above water, had equity in their homes. That's a good sign as well. So yeah, it's generated income, it's generated wealth. This market has.
And nothing like a good economy to help raise that boat, shall we say.
Yeah. In our economy here, where is that, Wallace? I mean, I always wonder, people are coming here and what are they doing?
Well, that's sort of a
what do
mystery to me as well. I mean, we don't have a huge industrial base here or anything, but we do see a lot of people coming in from out of state. Many of them, yes, are retired people, but younger people as well. I don't know what they're doing. Starting small businesses. There are some jobs here, but
a lot of people commute. Back and forth. They telecommute. What is that word? They work at home, right? They can work at home.
There is an element of that as well. Yeah,
a lot of that. A lot of people, young people. What's encouraging to me is younger people who want to go on to farmland and do a lot of that. Not talking about cannabis here, but I'm talking about regular farming of vegetables and kinds of things you can sell. And so we are changing. It's a changing world, isn't it?
Yeah, our little valley has gone through a lot of metamorphosis over the last 10 years, and the crash in some ways helped because it reset the prices. So as hard as it was for a lot of us that had property at the time, which is many of us, the reset has been creating more opportunities, not only for homeowners, but for people who would not have otherwise been able to afford a house.
Absolutely. I told a lady the other day, we were talking, and I said, if you want to sell it, anytime in the next few years, you might want to do it now, because I don't know if it's going to get better, a better time 6 months from now or a year from now. None of us know that, but this is a good time to do that right now, isn't it?
Yeah, if you've thought about downsizing, upsizing, sideways sizing, whatever you're thinking of, it is really a good time to do it. Interest rates are still low for the buyers. You've got nice, strong prices and strong demand, and your home will sell pretty quickly.
If I want to downsize and I don't have a place to go, can I write into? I mean, what do I do? That's the thing that keeps people back. Is they go, I got no place to go, so I don't want to put my house on the market. I want to sell it, but what do I do? What do we tell them?
You have to put it in the contract that the house you're selling, that you're living in now, you have a contingency that you're going to find a replacement home.
Mm-hmm.
And on the offer you're writing for the house you want to move into, that it's contingent on selling the house you live in. But the market is so strong right now
that's not a good position, is it?
Well, actually, it's considered kind of normal unless you're competing with many other buyers and cash offers. You'll sort of be okay. But that's where paying over price, having some extra goodies you can give the seller, being super flexible with your buyer. You can still get it done and get your new purchase done while the interest rates are still super low.
Mm-hmm.
It's always a dilemma and a balancing act, being able to sell and then go out and find that new place and get it into contract so that you can sort of synchronize the two together and not end up standing with nowhere to go for 6 weeks or something of that nature.
Well, you don't want to do that.
Always difficult. Yeah.
Yeah, that's what concerns, and it's a legitimate concern, especially if you're in a certain market, the price point that's going to sell quickly. Then what do you do? And so you're stuck. So you got to take care of that self, right?
Yeah, and I think the strategy with that people are not looking at, and they should more, is buy under what you can afford, so you have extra room in your budget to pay the difference if the appraisal comes off or if you've got to outbid somebody. But I also think this is temporary. We've got a changing market. It's been changing for several years. We're all of us agents talk, and we see a lot of more listings coming. And as soon as we get more inventory out there, it'll help, soften that problem that we're having of not enough houses to show people.
Right, and as the builders catch up as well.
And the builders. Yeah.
And they seem to be doing that a little bit more now.
Well, they're certainly active.
They're active. There's a lot going on. And it's not the different. We still need alternative housing, as you all know. We talk about that a lot. And your investors are investors into that. I mean, would you see an investor? Alice, someday I have an acre. I'm going to put 20 tiny houses on it. All legit.
Oh, yeah,
Do you see neighborhoods
we talk about
of that
it all the time? And we've actually talked to the city about this. We have people who, instead of wanting to own mobile home parks,
right,
they want to own tiny home parks.
So
I've actually been down to the city several times discussing this whole idea with them, and it's not that hard to do, and the value would be much higher. Not that I have anything against mobile home parks, because I love them. I think they're a great investment for people, but the tiny house is better because they're actual structures.
They're built to codes, and they're quite nice for people. They range in price from like 40 to
right, but they're on foundations. I'm not talking about the tiny house that's on
you're
wheels.
Talking about okay,
right? Yeah, I just want to be real clear. We're not talking about the thing you pull behind your car.
No, that's not the same
We're
thing.
talking about an actual house.
Yeah, but why can't we do some of these alternatives so people can get it easier to have additional dwelling units on their properties, so they can earn more money from their properties, create more value for themselves instead of the stringent rules it seems like we have sometimes.
And offer up some affordable housing for people as well.
And we had a show, Home First Development from Portland. They do unsubsidized housing, $90,000 a door. They're building 400 of these units compared to $250,000 a door it cost for this unit in Medford. That was subsidized housing. I mean, there's so many things going on, and we seem to be lacking so far in it in terms of being creative. I'd love to see a tiny house neighborhood like that. Alice, it makes sense for people. They'd be sold and create a new real estate market too for something like that.
And if we could have a prefab, I've never talked to anybody about this, but a prefab tiny house that you put on a foundation, almost like you would a double wide or a triple wide manufactured, that you install on a foundation on a city lot that follows the setbacks and all the rules for an additional dwelling unit.
Let's start a business.
That would be affordable.
Let's start
that.
Let's do it.
It would ease the housing burden.
All right. Well, we got to go. So we got to go. Alice Lehman, Wallace Wright, thank you so much for being here today on the John L. Scott Market Watch. So you can catch them. You just Google them, Alice Lehman, Wallace Wright, and you can find them. That'll do it. We'll see you next week. Have a great week, everybody, and God bless you all.
You've been listening to The Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshowOregon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making The Real Estate Show part of your weekend.